Rhynhardt, in terms of your views on the implications of the Spanish debt auction today for setting the tone for the Spanish debt auction tomorrow, what were your views on the demand that came through for that?
Well, it seems to be fairly good news, really. If I look at Spanish yields, I think it's strengthened by about 17 points, so it's just under 6% now. You know, in the short term, I think it's relatively good. How it'll play out, I think it's still very uncertain. You know, yields close to 6% is still very, very high, and it does tell you that the market does continue to be very worried about the fiscal situation in like Spain. I think it's going to stay with us for quite some time, and I don't think the market is probably ready yet to kind of move their focus from like the likes of Spain, from the likes of Italy. So it's kind of really hard to say, but so far so good, and the market seem to have liked the news flow that came out of Spain today.
And in the meantime, we've also had US earnings season underway. Goldman Sachs reporting better than expected earnings results. So too did Coca-Cola. It seems that so far so good from the US earnings season. That as we have US data coming out, which has disappointed. Factory output falling by 0.2% in March. Industrial production flat. Housing starts down 5.8%. But building permits, the rise there 4.5%. So overall, you're looking at choppy economic data, but really good earnings data coming through. What's your assessment of that?
Yes, definitely. You know, I think if you just cast your eye back to past reporting seasons, I think it's fairly safe to say that most of the time US analysts tend to be a little bit on the cautious or on the safe side. So I think each and every reporting season for the last 18 months to maybe even 2 years or so, there has been net earnings upgrades straight after reporting season. So it's probably not a surprise to kind of see a fair amount of those like companies beating analyst forecasts. It does seem also just looking at the macro data year to date, that the US economy is certainly doing a lot better than what people thought a couple of months ago. Yes, and I know the monthly data is very choppy and very volatile, but certainly the medium or the short to medium term trend certainly does look very, very positive. And I would probably expect quite a few of the corporates, as they continue to report this earnings season, to actually do relatively well.
Let's look at the resources sector and some of the big cap diversified miners that we're tracking. Rio Tinto really set the tone today. A disappointing update in terms of their quarter 1 report, 10% drop there in production, but it seems that it was weather-related issues in Australia that was the big drag there. Does this have any implications for the updates that we're going to get for Anglo American and BHP tomorrow?
Yes, definitely so. You know, if you look at the major commodities to which they are exposed to, which is really iron ore, I think it does have a major read-through for the likes of BHP Billiton. They're in the Pilbara region. I think on the iron ore side, their production numbers were down about 11% quarter on quarter. Now, the first quarter is normally slightly weaker than the fourth quarter due to startup. Just after like the holiday season, workers are fairly slow to return back to the mines, etc. But it wasn't a good number, and we know that region has been played fairly negatively impacted by cyclones, etc. So it's hard to say whether that'll continue for the rest of the year, but certainly I think the read-through on the iron ore side is not very good for BHP Billiton. Anglo American doesn't really have a lot of iron ore say assets in that area, but what they do have is some of their numbers do come from like copper, and if you look at the Rio numbers, I think their copper production was also down fairly significantly. Grades continue to decline, especially at their Grasberg mine. So the read-through to Anglo American on that front is also probably not very good. If you look at what sell-side analysts probably are doing right now, they're probably revising down their production numbers by about 3 to 5%, and I suppose you can't really rule out them doing the same for the likes of BHP and Anglo American.
Let's move on to the banking sector. There's been some comments from Lesetjo Kganyago, who's the Deputy Governor of the Reserve Bank of South Africa, saying that he's concerned about the unsecured lending space, the rate of growth that we've seen in those unsecured loans. It seems the market didn't really react to that. We had Capitec's share price increasing by 3% today. Able was up by just over 1%. So what are your views on how concerned one should be about the rate of growth that we're seeing in the unsecured lending space, in light of the fact that a man like Lesetjo has highlighted it as a concern?
Yes, definitely. I think it has been a concern of major investors really for some time. I think if you look at the more formal market, or the more formal market in like unsecured lending from the likes of an African bank and a Capitec, I think they have a fairly firm handle of what is going on in their like businesses. Their like credit control measures, I think, are actually very good. And if you look at the bad debt charges of someone like African bank, it has actually remained relatively stable for the past couple of years. I think it's more in the more informal market, so the micro loans, the loan sharks, etc., where maybe some lending is happening that's not really supposed to happen. I think in the longer term it will certainly become more of a focus. It will become more of an issue. They have been lending aggressively. I think growth has been well in excess of like 20% for quite a few years now, and that is indeed a very high number. But will it really impact the likes of a Capitec or an African bank in the short term? I think probably not, but it is definitely something to keep an eye on.
Just a note to any of our viewers, we're looking at the wall. A lot of those percentage movements haven't come through. The likes of Shoprite looking at a flat close for the day, but it was up by 2.4%. So don't read into those blue colors that you're seeing on the wall. Rhynhardt, just before we go, Pick n Pay out with annual results tomorrow. What are your views on a recovery in that stock? It has been recovering slightly recently, but what are your views on getting involved and getting exposure to Pick n Pay?
Look, I don't think it's going to be a very good set of numbers. They have already guided to, I think, earnings down roughly about 14%, which is significantly lower than obviously the retail peer group. I think it's a company that I think most analysts still, I think, expect maybe a little bit too much of them in the short term. I think this coming year is going to be a lot better earnings-wise, and I would expect earnings to grow very, very strongly. But if I look at the rating of the company and still the execution risk, I think there's quite a fair amount of risk still out there.